candle right there. How did that candle do for your buying phase? How did that candle perform? Pretty good. You got a straight away, you got an upside response. And then your final hidden buying candle was this candle here. What's the big advantage of the hidden buying candles? The big advantage of the hidden buying candles is you're buying at the close. And the closes also are a bottom edge. And you've got buyers above you. So you're not buying at the top of an up candle, you're buying at the bottom of an up candle. But you're getting that great price. And because of that, you're getting a buy response that makes money there, a buy response that makes money there, and then obviously you get this buy response that just rips massively to the upside. It's a great trade. Now, obviously, if we're looking at that, we can ask the question, well, was there any evidence of why there's an opportunity to buy into this? Well, let's take a look at that ABC's storyline. The ABCs obviously have been something we've been discussing today. You can see that this was quite a sizable rip lower here on oil, and we can start looking into what was happening in terms of, for example, the time segmented volume, for example. And take a look at the last of the last of ABCs. Take a look at the last of the buying candles, the hidden buying. Do you see it, Donna? See the difference? The two last of the hidden buyers coming in were coming in because the volume was disappearing off the offers. The first hidden volume candle was probably not a good candle to buy into. Probably not a good candle to buy into. Why? Because there's still plenty of selling coming in. So the hidden buying might not be anything to do with that process, so we can get rid of that bad boy right there. But when we see this storyline appearing on time segmented volume, and you see hidden buyers showing up because they need to now cross the spread, that fits in perfectly. Doesn't it? That fits in perfectly with the storyline as to why they have to have hidden buying, because they're not getting enough selling anymore. So that's one of the real big elements that can help you into this oil trade. Now take a look at the OBV at that time. Does anybody see the OBV at that time? Look at OBV kicking off here, guys. Look, OBV is at its lowest low with that huge volume right there, the same as time segmented volume. So with time segmented volume and OBV both giving you the same diverging narrative right there, the same diverging narrative right there, and all you've got to now do is find those hidden volume candles, find those hidden buyers into those areas for that long oil trade to kick off from that price. What else? Well, this was the one that we were obviously a little bit concerned about. We're looking at the net effect of inflation. And you can see the inflation triggers hadn't responded to that buying on oil just yet. They hadn't seen that buying coming in yet because the inflation guys were still working on a short trade. They weren't seeing this just at this stage as a buy trade. They obviously responded as soon as it became a buy trade, so there wasn't any edge, is what I'm saying, on the inflation measures. Let's take a look at the supply and demand. Supply and demand was massively visible in oil. Look. You see it? Look at the crack spreads and the skews. Massive divergence into those low prices. Not so much in the Brent WTIs, but it certainly changed the narrative, hasn't it? Orange above to orange below. Orange is massively below here. So the crack spread and the BZ spreads very, very clearly suggesting we should be buying oil into those low prices. But it's the supply and demand that really seals that trade right there, guys. And obviously from that point onwards, the next question was, can we expect to see a buy on the euro dollar, which was obviously a little bit weak there, and obviously on the basis that you expect to see a buy in the euro dollar, this becomes a far more usable trade here. And sure enough, that little buy on oil, off the low price of 60.70s up to a high price of 61.90s. It's a great trade, and it's worked out just beautifully in line with the volume declining that revealed the ability to look for those hidden buyers at the bottom edges, just the same way as perhaps you can start looking for a hidden seller into the top edge up here. You can already see hidden selling starting to show up into the top edge with that supply coming in, a little bit of a diverging supply line starting to show up here. And you can start to look inside these areas for a decline in volumes, which is quite visible. And when you look at that decline in volume and you look at the OBVs, you can see that diverging OBV coming in off the top edges, giving you an idea that we should be starting to work into that for a short trade off the oil highs. Great trade, lovely outcome, guys, beautiful. It's been a big rotational day, guys. Bonds have done another good bit of business there. We've got all the way back to prior swing just about. We came from the lows, I shouted at 28s. And we didn't just do 28s on the way back up. We busted the 28s wide open, and we've traded all the way through to 7s. It's nearly another $1,500. Nearly another $1,500, guys, on the way back up on that bottom edge bond. I did shout it this morning. I said we are in a rotational bond today. And this is what's happened to bonds. Take a look. Is that as rotational as you're ever going to see? Damn tootin' right it is. Look at it, guys. From the bond session that we started to talk about, I says we should be working these rotations. And you can see just how big these rotational trades have been. Massive rotation, but still rotation nonetheless. Massive rotation. I mean, one of those rotations is good enough for a day trade for us in terms of the full system, making a lot of monies. But to get so many of them, it's just been bonkers. Absolutely bonkers.